Thank you very much, Emmanuel. Can you hear me, Emmanuel? Can you hear me?
Yes, we hear you very well.
Thank you. Thank you, Emmanuel. Mr. President of ANIMA, Mr. Tarek Sharif, and also Delegate General Emmanuel Notary, distinguished participants, ladies and gentlemen. It is really my great pleasure to join you for this important annual gathering. And I wish to thank Emmanuel for inviting me a few days ago. His delegation and also Philo, the Vice President, was in my office. So we had a very good exchange of views on the current state of international investment, and also explore the possibilities of collaboration. And we identified a few issue areas, and we do wish to pursue. And on behalf of UNCTAD, I just wish to express our commitment to collaborating with ANIMA. This is a very important community. It has generated a lot of impact through a lot of activities and work that we have observed from Geneva, from the United Nations. For today, I have 30 minutes. I try to divide my presentation or dialogue into two parts. The first part is a longer term trends about the next 10 years. I'm talking about the decade of transformation of global supply chain or global value chain leading up to 2030, and implications for policymakers and investment promotion agencies. The second part is about current trends, which means what is the immediate prospects, what is the FDI status today and tomorrow. So first the longer term and then shorter term. Longer term is more about the several dimensions I would like to talk about. One is the mega drivers in driving the transformation of global value chain, therefore impact on the future trade investment patterns at global level and at regional level. And the second elements relate to the future possible directions. What will be the directions that trade and investment are moving towards? And then for that, let me start with the last 3 decades in terms of trade and investment. In fact, the last 3 decades witnessed 2 decades of rapid growth and 1 decade of stagnation, or 2 decades of rapid growth followed by 1 decade of stagnation. Why do I mean that? If you look at the data, which I don't have the graphs with me, but you may wish to consult our World Investment Report 2020, we look at global trade, global investment, and the global value chain developments. Through the 3 sets of data, we found that during the 1990s and the first 10 years of this century, the global trade and the investment witnessed rapid growth at the double-digit levels. And then for the last decade, before the pandemic, in fact, all these GVC growth, the growth of trade, growth investment, was significantly slowed down. In fact, in case of investment, if we talk about real growth rate, it was even a kind of slight decline. For global value chains, the GVC participation rate was from the peak of on average 30% to a kind of 28, 29%. So it was kind of not a stagnation and with a slight decline. So that's basically for the last 3 decades. In fact, we see that before the pandemic, there were already driving forces that really undergoing for the transformation of global value chains. In fact, the pandemic is just a kind of set to tip the scales, so to speak. So we predict that for the next decade, in the 2030s, is likely to be a kind of decade of transformation of international production systems, or we call it global value chains, or in other term, global supply chains, but they all mean similar things with a slight difference in definition. Now, there are 5 driving forces that will push such kind of transformation. These 5 driving forces, let me just highlight them. First, it's economic governance realignment. I mean, these are the things you feel, but I just want to summarize. The economic governance realignment that refers to kind of international trade and investment policymaking is shifting away from multilateral cooperation towards regional and bilateral solutions, and with kind of intensified kind of protectionism at home or rising economic nationalism. And this will strongly discourage outward investment in particular. That's also related to this kind of economic governance realignment is the kind of aggravated competition between economic powers in trade, investment, technology. So this kind of geographical rivalry will impact significantly the transformation of global value chains. And that may lead to a kind of a widespread global systematic divide of economic governance. The second driving force is this new industrial revolution. That we know that robotic-enabled automation, enhanced the supply chain digitalization, the Internet of the Thing, the additive manufacturings, all this will stimulate new cross-border investment in new business sectors, and through these new models of operations, and also can be disruptive to certain kind of industries. Take auto industry, for example. The third driving force is the sustainability imperative. The market and the governments are driving for mainstreaming sustainability in products and processes. That we know that the climate change drive, the environmental, social governance drive. So in terms of the kind of sustainable development goals will also change the future patterns of global FDI, particularly in terms of the source of financing, sectoral distribution, and the geographical locations. The fourth driving force is the global global corporate accountability movement, that global efforts to fight corruptions, illicit payments, tax evasions, and anti-competitive practices, and also the environmental social governance standards. All these will fundamentally change the modes of operations and the governance of multinationals. The fifth driving force is the resilience-oriented restructuring of the supply chains. So there's a massive pandemic disruption and aggravated geopolitical rivalries will drive multinationals to diversify and reshoring or nearshoring their global value chains segments, and to be more shock resistant and less reliant on foreign sources. So these are the 5 driving forces. They combine and they will drive the global value chain transformation in the decade ahead. And these driving forces are both endogenous and exogenous of the multinational companies and their international production systems. So that will affect the global investment with multiple impacts. So these driving forces will change the locational determinants that you are familiar with. That is the host country's policies and regulatory frameworks for international investment, the characteristics and dynamics of their host economy, and investment facilitation and infrastructure. These are the three sets of the fundamental determinants for FDI, and that will be changed by the 5 driving forces. So the way the changes will vary from industry to industry, and we identified 4 trajectories that transformation will go through. One is reshoring, the second is diversification, the third is regionalization, the fourth is replication. And then we look at all these through different types of industries, primary manufacturing services. And for manufacturing, there's kind of global value chain intensive industries, high tech, low tech, and we call it geographically distributed industries, and Michael Porter usually called it multi-domestic industries, that more of regional processing and some kind of global hub and spoke type of industries. And the services, there are also high value added, low value added, and wholesales related and transportation, logistics type of services, all that kind of financial services or business services. So different types of industries, sectors will be impacted by the 5 driving forces through the 4 trajectories that I highlighted a moment ago. So all these will have impact on the global supply chain or value chain. I summarized the kind of predictable 10 possible directions of this kind of future global value chain transformation and global investment landscape. 5 directions relate to the global value chain restructuring, 5 related to future trade investment patterns. Let me just quickly go through them. The first of the 5 relate to the direction of value chain restructuring is, in the future, possibly there'll be more regional value chains and the less global value chains. The second possible direction is the less fragmented manufacturing global value chains, but the more concentrated value added. This is manufacturing. The third is more platform-driven governance and asset-light value chains. This I need to expand it a little bit, because in the traditionally global value chains is led by the kind of lead firms we talk about. One big firm with a large number of suppliers, and the lead firm will define the direction of that industry or products moving, and others of other suppliers, and the lead firm will coordinate and define on the market and also the price. Now what we have seen today and in the possible future is a kind of network. ICT firms are leading the global value chain, coordinating the value chain. And what will be the implications? There will be asset-light international operations. We call it foreign footprint light of kind of leading and coordination. And this is because of the digitalization, because of the ICT enabled kind of platforms for global value chain, supply chains. The fourth is kind of the growing services share in value chains and offshoring. So on the one hand, we see that in manufacturing, global value chain is gradually moving towards regional value chains and sub-regional value chains. There will be more of that. Of course, there will still some global value chains, but for services, there'll be more global value chain. There'll be more offshoring, and particularly for high-level value-added services for that. That's partly also driven by the technology, partly driven by the servitization and servicification. So that will lead to more offshoring of services. The fifth is resilience and national security-driven global value chain diversification. So traditionally, we see that the value chain highly concentrated in a few countries, in a few locations. And now there will be further diversified, wider spread. So these are the 5 possible directions of value chain restructuring in the longer term that I wish to emphasize, because currently, because of the pandemic, there's a disruptiveness for the value chain. Therefore, there's disruption for the value chain transformation and slowdown of that process. But once the pandemic is over, there will be an acceleration of transformation of global value chains. Now, all these transformation of global value chains will have implications for global patterns of trade investment in the future. I can highlight 5 here. One is that there could be a kind of decline of global efficiency-seeking FDI and the increase in regional market-seeking FDI. The second possible direction is that the downward pressure on trade in intermediary goods, but increase in the trade in final products. The third direction is a shift from mass production to mass customization. This is enabled by additive manufacturing, 3D printing, digitalization. All these will move the industries from mass production to mass customization. It's moving towards that direction. So companies will go from scale to scope. That's the longer term. Again, I need to emphasize that. And the fourth one is the kind of growing FDI in infrastructure and the public services. So because for manufacturing and for services, because of its global value chain is driven by ICT firms, by platform providers. So it's overseas footprint light. So in terms of FDI flows by value, it looks lower, smaller in value. But in the meantime, we see what is coming in is more and more emphasis by government through their industrial policies and industrial development strategies, emphasizing more on infrastructure and public services. So in these 2 areas, there could be possible more FDI. And that's also driven by sustainability imperatives in light of the climate change mitigation and adaptation endeavors, and in light of longer term growth that needs infrastructure for productive capacity building. For that, we see the possible of growth. The fifth one is the kind of possible boost for FDI in green and blue economies. So that's very relevant for the MENA region. So this green and blue is partly driven by sustainable development goals, partly driven by climate change and many others. So these are the 10 possible directions investment and trade are going as a result of global value chain transformation in light of the 5 driving forces through the 4 trajectories, all with the transmission channels. Now, all these will have implications for investment promotion agencies, for governments. That requires a paradigm shift. There's a required kind of reformulation or revision of their industrial development strategies, industrial policies, and industrial policy tools, including investment promotion strategies and special economic zones. So these are the overall challenges of longer term. Now, allow me just to move on to short term, meaning what's happened today, this year, today, and what's going to happen next year. So here, I would say over the past years, I've been talking all over the places about very pessimistic picture. But today I wish to present a kind of quite a positive picture of the global investment trends and prospects. In fact, despite the high uncertainty and complexity of the global economic prospects, despite the fact that the pandemic is still with us, the business is adapting itself to the new normal and start massive expansion now. So FDI is now on its trajectory to rapid recovery, and the sustainability imperatives and the resilience building also drive the business reconfiguration worldwide. So these are the three mega trends for today and for next year. That is rapid business expansion. We have seen overall that the global demand is strong. Supply chain needs huge capex, while such a capital is cheap and abundant. So this global FDI prospects is now moving out of the shadow, as we observed. So in 2020, as we mentioned in our World Investment Report, that COVID-19 pandemic slashed the global FDI by 35%, from $1.5 trillion to $1 trillion. So even it was 20% lower than the worst record registered in 2009 global financial crisis. But this year, in 2021, global FDI has been bouncing back at a pace that far exceeds the expectations. That is, just for the first half of 2021, global FDI reached $852 billion. In fact, it covers pretty much of 70% of the lost ground of last year. So UNCTAD's data shows that FDI inflows in developed economies and middle income economies have surged by 100% and 30% respectively. Of course, we also observed that FDI in low-income economies remains at a low level and in fact is still in recession. But this kind of global picture of a positive picture also masks a kind of pessimistic elements in it. While the current global FDI rebounds is mainly driven by cross-border merger acquisitions, the greenfield investment or the new investment remains at a low level, and the growth is very slow. In a number of regions, they're still in the negative territory. So that is worrisome because new investment, the greenfield investment, adds the productive capacity to the global value chain and supply chain. So having said that, I would say my assessment, personal assessment, so far is a more of guess that perhaps that a full recovery is expected to be achieved by the end of this year and the beginning of next year, meaning FDI flows will go back to the level of 2019 at $1.5 trillion. But we need to bear in mind that 2019 $1.5 trillion was not a high level if we compare with the 5-year average of the last 5 years before the pandemic. So that is a kind of cautious optimistic view, or optimistic with some caution. I would say more of optimistic prospect with caution. The other caution, of course, is the kind of ambiguity of the policies, complexity of the current global economic situation, the unpredictability because of the risks and the pandemic, and uncertainty of the capital market and the central bank's policies. All these will have impact on the recovery of global FDI. Now, the second element is the accelerating global value chain reconfiguration. So that is why the current recovery is mainly driven by cross-border merger acquisitions. That's linked to the kind of reconfiguration of global value chain or global supply chain. So the global supply chains are being restructured to create resilience to the next shock. And that's leading to a massive relocation of international production segments through diversification and the nearshoring. That's what we're observing now. And it's going to be bigger as the pandemic goes away or tails off. So this is partly due to the lessons from the pandemic and partly due to the geopolitical rivalry, because the geographical tension also has driven the kind of diversification of firms of their value chain segments. So these large-scale adjustments to global production system will boost the international capital flows and their new geographical patterns. So the recent boom of cross-border merger negotiations has increased by 30%. That shows this. So even though that greenfield investment has been lagging, as I mentioned, and our statistics shows that it's been lagging in the first 3 quarters of this year, it will significantly catch up towards the end of the year and in 2022. That will be led by a strong investment growth in infrastructure and the new energy sector. The third element related to prospects is the surging sustainability finance that we have observed. So sustainability imperatives, we talk about all these SDGs and other drives, climate financing, is now effectively driving global finance and investment. So the worldwide endeavor to address climate change and achieve the SDGs by 2030 has significantly boosted global demand for investment in the green and the blue economies. The increasing call for higher environmental, social, and governance standards are also pushing the multinational companies to transform their business models, operations towards a sustainable development. So they may also take into account transportation cost. That's not only in terms of value, but also in terms of times. So all these will drive the transformation of global value chains. And this will boost the investment, structural driven, but also boost the divestment for some locations. So what we have seen that sustainability finance is now keep breaking the records. So according to our latest statistics, global sustainability focused finance, the funds, equity funds, the bonds, all these increased by 80%, even during the pandemic. During 2020, sustainability focused finance at global level increased by 80%, reaching $3.2 trillion US. It consists of $1.7 trillion US of sustainability themed equity funds, 1 trillion of green bonds, 212 billion of social bonds, and 218 billion of mixed sustainability funds. So all these provides the investable capital for the downstream direct investment. So this is the potential for multinationals to pick and invest in the sustainability sectors. So these funds are expected to grow. Even these funds are expected to grow exponentially in the years to come. Having said, these are the 3 positive factors, but there are still challenges. I think I mentioned them already. I just want to emphasize this rising economic nationalism, this kind of impact on mainly on outward investment, but also for some countries on inward investment. And the second is the uncertainty I mentioned, this we call the VUCA, uncertainty, unpredictability, complexity, ambiguity, volatility. And there's also geopolitical tension, and that may trigger all sorts of complications at the regional level or even at the global level. that will impact on global FDI flows. So now, negative factors aside, for positive ones, we see the opportunities and the challenges for investment promotion. So for investment promotion, I would say the implications for investment promotion agencies will be, first, investment promotion agencies need to start shifting the gears. The gears of that many investment promotion agencies try to shift the gears when pandemic bursted, from active promotion to investment retention and facilitation. Now, investment promotion agencies need to shift back more towards investment promotion starting next year. Gear shifting or shifting back. Second is targeting. So given what I've highlighted, there's a great reservoir for investment in sustainable development sectors. Targeting at sustainable development segments that is related to infrastructure, public services, blue economy, green economies, and this also looking at watching the global value chain reconfiguration. A large part of that is driven by sustainability, be it nearshoring, diversification, or regionalization or replication. Now, the third one is prepare pipeline bankable projects. I think that at this stage, as I mentioned, there's really a lot of money floating around, cheap and abundant. There is a lack of bankable pipeline projects. So investment promotion agencies and special economic zones need to focus their efforts to get project pipelines ready for sustainability themed investment and for recovery. And so this the booming of sustainability themed financing products can be conducive to the investment and downstream, not only in quantity but also in quality terms for investment, particularly in green and blue economies. So all IPAs and special economic zones worldwide should shift the gears, target at sustainability, and prepare pipeline projects. So these are the three recommendations I wish to present here. I think I've taken too much time. I should stop here now. I guess I've taken half an hour. I yield floor to you, Emmanuel.
Very interesting, very rich as well. I know you have a PowerPoint presentation to support this speech, and we'll be happy to share it with the audience. But in a sense, what you are saying could be encouraging for us. I know it's a balanced presentation, but the fact that there is this nearshoring, thanks to the sustainability imperatives, thanks to this industrial revolution, this new technology industries, that's quite positive. When you say that there will be more investment in infrastructure and public services, I mean, that's where the South Mediterranean countries lag sometimes behind, and that's positive if they could catch back on this occasion. Also, when you talk about national security imperatives, we already see from our members, which are managers of economic zones, that some strategies are emerging in the health industry, for example, to be present not only for Tunisia but for the neighbor countries, and to be able to serve shortly the demand for health products, for medicines, etc. So we see some encouragement in what you say. There are already two questions from Ibrahim, the first one from Ibrahim Abdallah-Rahim from Higher Council for Innovation and Excellence in Palestine. Is saying third world countries' economy were less affected by COVID and gain more leverage at the level of production. They may gain more opportunities. What do you think about that, James? The question is written in the chat.
Yes, and which countries? I didn't.
Third world, meaning less developed countries.
Developed
less developed countries which were not affected by the COVID, will they have gains against the countries that are more affected?
Yes, Abraham, thank you for this interesting question. What we have seen, this dichotomy, development and the less developed countries during the pandemic and after the pandemic is very interesting. During the pandemic, that is last year, 2020, we saw that the drastic decline of FDI was mainly in advanced countries. So for developed countries, the decline was over 50%. The US got a decline of over 40%, while European Union was 74% decline, drastic decline, while developing countries, always with the less developed countries, the average of decline was 16%. And even for developing Asian countries, the decline, and there was no decline, and was modestly increase of 4%. So that is during the pandemic. Now, we're still in pandemic, of course, but I'm talking about this year is the opposite. In a sense, advanced countries are now having significant increase of global FDI, while low-income countries or less developed countries are suffering from kind of low level of growth. Middle-income countries is doing well, but low-income countries are doing badly. I think there are two reasons. One is that low-income countries, they tend to attract more of greenfield investment, new investment. And then for that, we see just the greenfield investment has been low level. There's still kind of ripple effect because last year, the announced greenfield investment deals declined while the actual flows remain relatively stable for low-income countries. That's why this year it shows the kind of growth stagnation. Now, for advanced countries, because the decline was so drastic last year, it couldn't be lower. For EU, it was the lowest for the last 2 decades. And for US, it's also 45%, it's drastic decline. And because of this year's rebounding recovery, it's not a big boost of new ones. So that's why this kind of dichotomy is reversed for this year. For low-income countries at the moment, it hasn't benefited, partly because I think it's the absorptive capacity for sustainable development-related projects is very low. Countries are not ready. There are not sufficient attractive bankable pipeline projects. The risk profile is not attractive enough for companies to get in, even though they have a lot of funds floating around. So that's why the investment promotion agencies and the government needs to address that issue. If I can, Emmanuel, I just have a couple of numbers just wish to share with you about MENA region. For the first half of this year, MENA region as a group attracted $50 billion. And if we see this kind of the rate, interestingly, compare with the similar period of the same period for last year, it increased by almost 50%. So that's the MENA region's flows, and that flows accounted for 8.2% of the gross fixed capital formation, which means similar to a total investment, domestic and foreign. Now, in terms of FDI stock, by the end of 2020, MENA region has accumulated $1.3 trillion of investment stock, meaning companies invest in this region. The existing investment already in the region accumulated over the years. And that represents 39%, almost 40% of the GDP.
Sir, I have other questions, so
Yeah.
I'm getting you to move to another topic.
Yeah.
About this, we have two questions from Anis Daoud and from another speaker. So you're talking about reshoring, nearshoring. Could you elaborate on what it means? You also mentioned cross-border M&A, which will lead the FDI trends in the future. Could you be a bit more specific about what it means? And also what would be to be improved by the MENA countries, by also maybe North Mediterranean countries, to attract possibly a relocation. So one topic is about local value chains, nearshoring or reshoring. Possibly within this trend there is relocation possibilities. So could you elaborate what will this mean? He's also asking the question, and it's about, do you see made in countries trends like the improvement of having local productions, national domestic productions, and what should be done at the government level, at the policy level, to attract this relocation and benefit and take the most of this trend. And then we will close the session.
Yeah.
Thank you.
Okay. I think this reshoring, nearshoring, particularly, I think for this region, what is more relevant is the regionalization and the nearshoring. I see that because of the geopolitical attention I mentioned earlier, this concentration of global value chain, mainly in Asia or in part of Europe or in part of North America, maybe will be diversified. And we'll see that it's already happened even before the pandemic. I would say that the Japanese companies, the Korean companies, they invest, they divest quite a bit to Southeast Asia. So that's kind of a regionalization and the nearshoring because of the trade war and the technology war between China and the US. And also we observed kind of the Chinese firms, they also went out to invest in the neighboring countries. This is what we call trade barrier hopping, FDI. So that's happened. But in the meantime, in terms of numbers, the China's investment inflows did not decline simply because China managed to attract higher level of technology intensive and services investment that is less export oriented, less vulnerable to exports, to trade barriers. In this nearshoring will happen in the sense we'll see that if there's further geopolitical tension in different types, not just the China-US, but there are also other types that will make some companies move. For instance, Brexit also has some impact on that move. So I think the MENA region can benefit. The MENA, if we look at global value chain structures, there are three big ones, and we've seen three big ones. Each of the big ones has small ones. Just take for Europe, for example. Europe as a whole is a big global value chains clustering for a number of industries. And within that, there are three sub-regional ones. One is the MENA region, and it was led by Italy, France, and Spain, for example, and we have that market. The second is German-led, of more of Central Eastern European countries, and then we have the Northeast Europe, finding clustering with the Nordic countries. So for that, I see that will be further strengthened in the years to come for the drivers that I'm talking about. So for this region, I would say there are 2 to 3 things. I'm just thinking aloud in the net. The first is that there's a need for this region to strengthen collaboration among the investment promotion agencies, ideally to have a common investment promotion strategy, to enlarge the market, have deeper regional integration will help enlarge the market for attracting market-seeking FDI, and deeper collaboration among the agencies and among the markets within the region will make it a stronger in productive capacity, absorptive capacity for export, for manufacturing and an export to the rest of the world. So regional collaboration. Second, I see the importance of the collaboration between investment promotion agencies and special economic zones. There are so many special economic zones in the region. They are small ecosystem that is better than the rest of the country or rest of the region. The government puts a lot of efforts for infrastructure, for incentives, and these will be the kind of important locations for international investment. So joining hand between investment promotion agencies and special economic zones and export promotion agencies, the triangle collaboration, extremely important for really collectively making efforts to attract investment. The third thing is at government's level to really improve the investment facilitation. And of course, there's for that, there's a lot to do, especially the using the digital means for e-government. That's extremely important. And in that connection, of course, there's a basic thing, the stability, the political stability, the stability of the society is the critical for foreign investment to get in. So that's my perspective for the region and in terms of this transformation.
Thank you very much, Zhan, for all this we could stay hours of discussion with you, so we'll probably organize other discussions in the next month. And we understand also that the situation evolves constantly because your analysis on FDI trends today is not the one that you had 6 months ago. I think the figures of 2021 are very positive and very impressive compared to what we could expect. So we will continue the dialogue over the next months, and thank you again for being with us this morning and for taking the time to exchange with us.
Thank you for having me. Thanks.